Hi everybody. When we're working through these inventory costing items, I want to make sure that you understand the assumptions up front here as to what we're doing. Look at what's going on with this data here. What we're doing here is we're buying for our store multiple quantities of the same item. So let's just imagine that we are GameStop and we are selling the Madden football game, the video game, right? And what happens is maybe we sell them for $60 each, but we buy them at a lower cost than what we sell them for. And what happened is here, if we're looking at here in July, right? Let's imagine that we bought 2,000 of them that cost us $20, but then the next batch that we bought was 6,000 that cost us $22 each. So see how we're paying a little bit more to put these video games into our store? This is our cost for the video games. And then the third purchase was 8,000 at 25. So again, the same exact video game, we're selling it for the same price, but we paid different prices. And once we sell them, we want to figure out which ones did we sell here. So what I want you to do is I want you to lay out these three buckets. So just draw three buckets, simple as this, just like little U's here. They look like buckets. And in those buckets, you want to focus on the beginning inventory first, and your purchases. So don't look at your sold ones yet. Just look at the beginning inventory and purchases. And let's just fill those out. So my beginning inventory on July 1st was 2,000 units that cost us $20 each. And then let's just total that out, right? 2,000 times 20 is going to be $40,000. So this purchase here cost us $40,000 to purchase on July 1st, which is our beginning inventory. Okay, and then let's just go in order. The next purchase was when? Looks like July 13th here, and let's put that in a bucket. So I'm going to go July 13th. I bought, looks like 6,000 copies of the video game, and that's at $22 each. And if we do 6,000 times $22, I get $132,000. So this whole purchase cost me $132,000. And then we'll do the third purchase. The third purchase was on July 25th. So there's 8,000 and those cost us $25 each. So 8,000 times $25 equals, that's an even number, 200,000 even. All right, again, so we're focusing on our purchases only. We're not looking at our sales yet. And pretty much for most of these problems, we're not looking at our sales dollars at all. What we are concerned about, though, is going to be the number of items we sold. All right, so I bought 2,000, I bought 6,000, I bought 8,000 at varying prices. The next step that I want to do here is I want to total these up here. So if you look at this top line here, this is units available. Units available. And how many do I have here? It's 2,000 plus 6,000 plus 8,000, which is 16,000 units. Which means that during the month of July, I have 16,000 copies of this video game. Again, I'm assuming that it's the Madden video game that I'm selling here. I have 16,000 copies that are available to sell. And then how much did those 16,000 copies cost me in total? And that's going to be this line here. If I sum these up, right here, this bottom part, and that's going to be called cost of goods available for sale. And how much is that? So I have my 40,000 plus my 132 plus my 200,000. My cost of goods available for sale is $372,000. All right, so those are your first steps when you're doing any of these problems. You want to figure out how many do I have available to sell. 16,000, my beginning inventory plus my purchases. That's the formula for units available for sale. And then what is my cost of goods available for sale? And we've learned this formula. It's the beginning inventory in dollars plus the amount that I purchased in dollars. And there is my cost of goods available for sale. So we're almost pretty well set up here. We have units available for sale, we have cost of goods available for sale, and then there's just one more piece that we want to get set up before we move on and do these inventory costing methods is let's just count how many that we sold. Now when you do that, keep in mind this is a periodic inventory system, and periodic means you record and count the inventory at the end of each period. So basically, we don't care when we sold these. What we do care is when I get to the end of the month, how many did I sell during the month? So our last step in this process is going to be to count just the total number of units that are sold. I have the 1,000 here, I have the 3,000 on July 17th, and then I have the 5,000 on July 27th. So let's just write that down here so we keep a note of this. Units sold equals what? 1 plus 3 plus 5, so we sold 9,000 units. So that's it. Now we'll get ready to, now we're basically ready to figure out what the cost of these, how much of these 9,000 units cost us. And that's what the inventory costing methods are going to determine. We had 16,000 available. We sold 9,000 of them. Which 9,000 of these 16,000 did we sell? So in the next videos, you're going to start to see how to calculate that.